Hey, good afternoon, everyone. Great to see you all this afternoon. Welcome to the PivotBoss trading room. I have Visual Trader up right now with a blue background here, and I got a ton of candidates here to share with you all. A lot of long candidates, also some short candidates. We could be overextended in a couple of groups here, and we'll share that right now. We're also I'm on a tight schedule here today, so I'm going to try and keep it at around a good 45 minutes or so or less, and so keep it nice and focused with all the candidates we have, and go from there. So right now, really quickly here, for those of you who don't know who I am, my name is Frank Ochoa, also known as the Pivot Boss. I wrote a book called Secrets of a Pivot Boss, which has been published almost 10 years now, I guess, or 9 years. And still continues to get fantastic reviews from traders all over the world. Just a great book that continues to work in the current market, worked in the prior markets, and will continue to work in future markets based off of you know, a lot of the concepts that we use in the trading room, and we use in general here, which is a lot of pivot-based and price-based types of techniques and concepts. Secrets of a Pivot Boss is the book here. Premium Trading Room. We also have additional training here, including Swing Trade Pro 2.0, which is brand new. You can learn more about it at pivotboss.com. But again, if you haven't heard who I am, Secrets of a Pivot Boss, the book, is always a great way to go. 69 bucks right now, and you also get access to a dashboard here with additional training and tools if you buy from my site. I think Amazon sells it quite a bit more. But it's there as well. But a great value here to start off. Let's take a look at the markets here. I did want to share a few things right off the bat. I have some long lists and some short lists. But first I wanted to look at the higher time frame here, and I wanted to look at some futures contracts just for a quick moment to kind of get an idea of where the market might be going, because before we start looking at all these candidates, we kind of got to have an idea of what we think the market might do, how it might approach the next month, and so let's take a look at that. Hey Jonathan, good to see you. Thanks for coming. If you take a look here at the ES, one thing that we left off with last month, the last monthly market outlook, we talked about how strong this rejection was. I mentioned that this looked the part. The only thing that I was concerned with was the part that it was, the rejection occurred right in the middle of the holiday trading there, and basically that wanted to see if it would hold, and it did. The first week of January it pulled right back to where it was supposed to hold, the 2450s. We talked about that, and that was the last monthly market outlook. I said if price pulls back and holds that zone, we have a great shot to retrade back toward 2586.5, which is the FOMC key level, and perhaps retrade into 26 to 2620 for a major retest. And that played out perfectly. What also happened was price was able to push above 2600 and 2620, make it support, and then it started to trend even higher over the last week of trading, reaching highs today for the year. Very solid move. So if you take it all the way from this low down here and see how far we've come, that's quite a move. That's a big time move to not see much of a pullback or correction. We had a little pullback here which got the party started, and then this was a sideways energy building phase that led to another round of strength. So are we going to see a pullback here that leads to another round of strength ahead? Because again, we have a higher value relationship. Here's your pivot range for January. Here's your pivot range for February. It's higher. We closed above it, so when you pull back into it, ideally bulls step in and defend. The next upside target on a swing basis would be the 28 to 2820 zone. That zone that we talked about last time, right? From down here, we mentioned that's the target, and sell it, and sell it. And that's kind of where we're headed now. Being back above 1220, 2620 rather, suggests that we could be headed to this zone. And even if we pull back to 2620 or 2615, it's still a buying opportunity for a continuation here. Only failing to hold 2620 2600 even would open up a little bit more of a pullback. But right now it appears we're inside this price distribution, and when that occurs, you usually see a continuation to the opposite end. So how do we proceed from here? Do we wait for the pullback and then look to get in? Do we just let it play out? How's it going to play out? Right now, after running off this much, what I've been saying in the room here is to take some profits. Take some partial profits if you've gotten into some things. I've taken half off of some things. I've added to others after taking some off. But we're getting overextended in certain areas, and it would not hurt to put on at least a hedge or take something off, trim the position, and if it pulls back, then add back to it on a continuation higher. So right now, this market appears poised for a little more upside, but at any moment in time, I think the rug can be pulled out. It could happen tomorrow. We closed above the previous month's high, and tomorrow could be an outside sell down day where this thing takes out 2-day lows and just drops, right? So again, it could happen out of nowhere. It can happen quickly. If this thing takes off and price drops through 2600, do we dip deeper? I think we've bounced so much now that any pullback has a higher odds of being defended right now than it did before, unless this thing gives up 2600. Then you're looking at 2625, and below that, watch out. So some major levels that I wanted to talk about, but this market has been very resilient, very bullish. It's been an ideal start to the year in many respects if you've been in the right spots, which a lot of the market has ran. Some hasn't participated, but there's been quite a bit of pockets of the market that have really run, and perhaps we could see a little bit of a swing back. So just a little bit of higher time frame analysis here for the ES. The NQ, you can kind of overlay that analysis. Very, very similar type of price action. Very bullish start to the year. Testing prices above the previous month's high. Again, you have 3-day lows that are all right here at around 68.50, 58. And a break of those lows opens up quite the pullback that, again, after it's done flushing here, could be a buy opportunity back up. So, again, warning of a little bit of a pullback to come, but then potentially having a better opportunity to get in a little cheaper here if price can hold this pullback zone. So, again, you can clearly see we've had lower highs, and you were coming all into a zone where it could easily see a pullback of some manner, but we're not seeing it just yet. And a run through 3-day lows could really trigger downside price action. So there's a little bit of some backstory here for the ES and NQ heading into February. One thing I wanted to talk about with regards to crude oil is that if you look down here on the advanced ADR indicator right there, I got it set to 15 days. So basically it's taking the range of a 15-day rolling basis. So what's the highest high and the lowest low over a 15-day rolling basis? And that gives you a data point, right? Well, when you see that data point recently, it's been very compressed. You can see average 15-day range is that gray line. It's somewhere in here at times. But when it gets too compressed, think this, then the odds increase for major expansion. That expansion right there is what we're looking for. You got it down, and then you got it back up. Well, we're seeing that type of price action again. Another narrow range. Look at how compressed it got here. And that's basically looking at the last 15-day range, which is really kind of like this. And again, whenever this is ready to see expansion from this range, you're likely going to see volatility increase to somewhere between 10 and 12 points. That's what you'll likely see. That's what it gets to when you have a 15-day range. Now, those 10 to 12 points don't all have to come in one direction. What I mean by that is, right now, if we're at 55, it doesn't mean we have to go to 65 straight away or even 45 straight away. What it means is you got a range of about 10 to 12 handles coming up for the next 2 to 3 weeks, and that's what this thing is forecasting. So say price were to, rally higher and then reject 57s. And then from 57 high, it could drop, say, as low as 47, and that would be your 10-handle range, right? So this thing could rally up to 60 and drop back to 50. It could drop back to 50 and rally to 60, something like that. And now you have your 10-handle range up ahead. I'll be honest, you know, I've thought that this was going to see some selling pressure here lately because we are bumping up against the major 55 CLVN, but we haven't seen that. We just haven't seen it. We've seen nothing but strength. We've seen an uptrending market. We've seen buyers come into the trigger zone and defend it. We've seen price holding now above the 8-period average, you know, for weeks on end now. This looks the part. If 4-day lows are taken out at 53s, perhaps we see a bit of a pullback that could take us as deep as, say, 49s, right? Back to this low. And if it hit that zone, I would say it's a high probability buy back up, unless proven otherwise. So again, not easy right now in terms of direction. Unfortunately, when you're dealing with standard deviation and you're dealing with volatility and you're dealing with compression, it doesn't tell you anything about direction. It just tells you about the spread of the price range, right? And that tells you it's very narrow and to expect expansion ahead. So volatility is coming. Hard to tell direction. Obviously, the near-term direction is up, but we're up against major resistance. So if I were to bring this out one more time and talk about one more thing before we move on, this crude oil is really good about price distributions. So from 42 bucks to 55, that was a price distribution that we lived in for a long time before we finally broke above. When we broke above, we rallied until we failed, and then we dropped back to that level and then dropped through it. And now we're back to it again. So that 55 is a big time level. So that's why I've been a little bit more leaning bearish here, thinking that we might see resistance here at some point that could lead us back to 49s or maybe even back to 42, and we trade in here. It's going to take quite a bit to push above 55s, but if it does and can hold above 55, maybe we have a range that takes us up some degree, right, to retrade in here perhaps between 55 and 64. So just some things to consider, but we're at a major CLVN, 55s, big time zone in the chart, and you either push through that level big time or you reject off of it big time. We're right at the pivot right now. With gold futures, I wanted to say here with gold that this thing has been a beast to the upside. It has fulfilled everything that we talked about in our room. On this day right here is when I mentioned that we would likely hit that pink dotted line by the end of the year. It got close and then hit it on the first trading day of this year. And it was all because this rejection finally occurred like it was supposed to at the right spot in the chart, the whole thing. Absorption occurred, a rounded bottom started happening, and then every pullback started becoming a buying opportunity. The last two I called here was that buy and this buy, and they've been very great. And now we're pulling back yet again, and we're pulling back into the PIMA trigger zone. Well, not quite there, but almost. And also the pivot range. So again, we're inside a stacked and sloped type of environment here. Any pullback into here, as deep as 1300 this month, could be a buying opportunity for a continuation higher. We're looking at 1300 to 1360 as the target here. And if you look at the wider view of gold here, you'll see 1240 a big level, 1360 a big level, rounded bottom. Here's the 1240, and it's made its move. The only level left to test is 1360. It's likely going to hit that target sometime in the next month or two. It wouldn't surprise me if it hit it this month. So this thing has been very strong. It's likely going to continue to hit, continue higher to hit that 1360. Any pullback as deep as 1300 could be a great buy for continuation. Now, one thing I will say is that while the uptrend is very strong, the market doesn't have to go up right away. It could certainly kind of go sideways a little bit before we see the next move, kind of like it did last month. You know, it came back, didn't quite get into the pivot range, went sideways, then hit it, and then bounced. So this one is inside. It could be a little range bound and then go down the road. So I still think this is poised for 1360. 1300 is the next pullback zone that could provide a great bounce point. So that's gold. So I wanted to talk about those four markets, provide some higher level detail, and now we can jump into some stocks. I have quite a bit of long candidates, and these are longer term candidates and some short term. But because this is a monthly market outlook, I like to look at candidates that might move over the course of the month, or maybe 2 or 3 months sometimes. For example, this is one we've been talking about in our room. This is Western Digital. It's already had a great move. But one thing I wanted to show is two things when I look at long-term change of bias candidates is you want to see a long-term support. You know, this is a long-term support area, 35 bucks right there. See, it rallied here, rallied there, and now it's starting to rally here. So when it hit 35 bucks and started to hold there, I mentioned to our group here that this looks like a good change of bias candidate. This was the beginning of the year. As price is sitting in here, I mentioned the downward trending bias here. You see lower value relationships with the pivot range. Those pink lines are going lower. But then, what you also see is right here, price pops up on earnings, and bang, and now higher value relationship created for February with a higher close, and now that is a full-on change of bias candidate. And so when we started talking about this earlier in the month, what I mentioned before was when you break a long-term trend like this and you're finally able to change the bias of the trend and start heading higher, it can usually be a 1 to 3 month continuation play. So we're kind of, you know, in month, not even a full month, but we're in the first wave here of strength. The next major pullback could still be a buy, and this thing could be trending higher for the next 2 to 3 months. So that's Western Digital. You're going to see many candidates that look like this. Let's see. Let's look at HTHT. This one is a rounded bottom. Again, accumulation. When you're looking at long-term patterns, you want plenty of accumulation. You want accumulation, and that is where large participants, institutions, or whales, they're all accumulating that supply here, and eventually this thing gets pushed to the upside and a major trend ensues, and they mark it up on the way up. And this one right here has done quite a bit of accumulation. 36 is our resistance. It is a Chinese company, so again, you just have to be careful and cautious with that. But I think this is approaching the end, I think, of the trade war compared to where we were. If this breaks to the upside, you have this target right there, right? That's the easy target. Anytime you have a rounded bottom like this, you rally to the recent pivot high, and that's about 49s. It could even go through that. So again, this is one that may continue to build out for the next month, but has an upward trajectory probably for the next 4 to 6 months if it can get above 36s. The reason I say 4 to 6 months is because you have 1 month, 2 months, 3 months, 4, 5, 6 months right here, and usually whenever you're ready to see that markup phase, you'll mark up or mark down, whichever way, about the same time duration as the accumulation. So 4 to 6 months up after 4 to 6 months sideways. So this is a nice long-term candidate that could be headed back toward 49s. We also have here GoDaddy. This one's already barely starting to move. Again, this was another one I had earlier this month as a candidate that was likely ready to start rallying. It bounced off the 57.5 CLVN, which is a major CLVN, major rejections off that area. Nice compression here, and at the end of the month in January rallied. Higher value relationship. I would say the next pullback could be a very nice buying opportunity for a continuation higher. This one might be, say, a 66 to 76 type of play. So I wouldn't necessarily get in right now on this one, but it has the potential to see a pullback that goes as deep as 66, and then you could defend into, say, 76, which is the key range high. That'd be a plus 10. And then this could also be perhaps a 2 to 3 month mover as well. So this one on the next pullback could be a great buy. OSTK. This one is a long-term double, or maybe a close to a long-term double. If you look at the weekly chart, but it doesn't mean that there's not some risk to be had here. You got to definitely be careful here, but this low right here is very significant, and it comes into about that low, so 10 to 13 bucks. That has been about where this one just launches from. Launch. This last time it was trading 13s, 15s, and bang, 90 bucks. And now it's made the full round trip all the way back. So that is that's a lesson right there. When I see a chart like this, it's always a lesson, right? If you say you got lucky, you held a chart and you got in at 15 and the thing rallies to 90, you know, at some point you got to take some off the board, because there's no guarantee that it stays up there. It could come all the way back and then some. So always look to take profits as it goes up. But this one right here, holding off the lows, and what I really like about it right now as well is that it has kind of a failed market structure look to it, where it, you know, had clear market structure down, market structure down, market structure, and then fail. Then it pulled back and retested it Friday and held. And so this is the early signs. If we can continue to see a defensive 16s here, this thing could easily pop higher and could be on a long-term path back up. Right now we're trading 1781. Maybe we get back to 16s again, but again, any hold or pullback into this zone could easily be a move back toward 30, or maybe that LVN at 32. So I mentioned this could be a long-term double. 16 to 32 could be in play, and that, again, while that's a double, it could be done rather quickly if it really wanted to. So again, but I would not hold it if it failed 16 horribly. It's not one that you want to turn into a long-term holder if it can't hold 16. So just wanted to show the initial signs of change of bias on this one. You see the higher value here after all the lower values. The change of bias starting to happen on the moving averages. Everything looks the part in terms of perhaps running higher. And that's one right there to continue to watch. We also have, this is one right here, CONN, that looks very similar to this one. This one's been dropping down. It recently took out recent pivot lows at 22 and dropped to this support here around 17s. When you look at the daily time frame here, lower value relationship, lower value with very narrow pivot range for this month, which suggests increased volatility this month. Right now, this is showing a sell signal here. It's showing absorption. It looks like a sell candidate, not going to lie. But the way it looks, if this thing closes, say above 21s or above that midpoint, we could be on the way higher and headed to 31s. 30.58 is value. This looks like a longer term change of bias candidate. Again, if it can push through 21s, close above 22s, I think you have another 10 handles to 31, 32 coming. So this one looks like, again, has a good long-term change of bias coming up. Now these are beaten up stocks. Like we've looked at Overstock's beaten up, CONN's beaten up, Western Digital was beaten up, HTHT was beaten up. This one also beaten up, which is EAT, but it's bouncing back, and it hasn't been as bad as the others, right? Those were beaten up and way at lows. This one has been beaten up, but is at near-term support, which is held quite well. 42.5 to 40 or 41 has been a major area of support here, a major pivot. And it closed below there. It had an aggressively bearish January when everything else was running higher. This thing was selling off. And look at how fast the bounce back was today, up 5.75%. It rejected, clearly rejected prices below 42s. I think, you know, if this thing continues to hold 42s, we could have a pullback as deep as 42, 42.5. That could be a buying opportunity for a continuation higher. You have value at about 47s. 46.50, and then you could get it up to about 51s comfortably before you probably start thinking taking some profits, because it doesn't last long above those levels there. So I think this has a good shot to go back across the trading range. So this is a healthier stock compared to some of the other ones we've seen, because it is in a range, it is kind of at highs, it's not beaten up like some of the others have been. This one looks good. Another one that looks great that's been holding up well is CME. This one is fantastic. I really like this one a lot. There's a lot of dynamics here that I like about it. The only thing I don't like about it is that you didn't see market-wide participation in this type of move, but that's okay. What you really see here is a very, very bullish stock. Right? This is CME Group. Very bullish. Here's Q4, right? Q4 when everything got hurt. That's the beginning of Q4. This actually made money, right? Perhaps lots of I don't know, you know, lots of commissions or whatever is going on. You got all this right here. Trading range action, boom, and then it's holding again. So it's a very strong stock. The other thing here is you have earnings coming up. That's on February 14th. Earnings here don't seem to affect price that bad. Even if they're going to sell off after earnings, you don't see the dramatic gaps against it, so it's, you know, you're not going to get hurt in most cases, though that, you know, anything can happen at any time. But what I really like about this is that it has already formed a beautiful compression after a major trend up. It's got clearly 3 good months of compression going on. Today it tried to break down. It aggressively sold off for a full hour. A full hour aggressively sold off, and then it rebounded the rest of the day. It broke through, you know, multiple week lows, hit below the previous month's low, and rejected to go all the way back up to basically neutral for the month. That's a strong rejection. I would say any retest of 180 could be a great way to be in a 2 to 3 month trend out of this one. Whenever you have a beautiful range in an uptrending market that is mature being 2 to 3 months, and then this type of rejection occurs, it tried to go down and failed, the results are usually very, very bullish. It's really kind of, you know, what a lot of the market rallied from last spring after the drop. For example, I don't know if I can find a couple of these. Was it Baidu or Baba? I mean, maybe it's Baba here. Has a good one here. But, you know, it's one of those things where, you know, you build a range, and then you fail to go down, and then you just launch higher. This one's not even that good, but I mean, there's some really good ones here. So I would say that CME Group, probably my favorite long on a 2 to 3 month basis, but it could also be a great short-term winner as well. A retest of 180 will be very significant tomorrow. I would say any failure to close above 180 would kind of break the scenario, because, you know, again, if you can't close above that level there, you probably do leak lower. So I really like this one a lot, and this one's quite a difference compared to some of the others, as it's been strong in this market, and looks like it could be ready to go higher. Okay, that's the long side. I got short candidates as well, and most of the short candidates are in the cannabis group. Cannabis rallied significantly in the first month of the year. Major moves up. A lot of them hitting new highs, or well, some hitting new highs, some hitting highs that I hadn't seen in a while, and they look a little bit overextended. So one I'm going to start with here is Kronos. Now I would be cautious. I'm going to say this right now. I'll be cautious shorting or putting puts on cannabis. It's been a very bullish move, but anytime you go parabolic like this, the tendency to come back is very, very high. So again, the right risk management approach is always best. This one I was looking at potentially selling here, and I didn't because the market was so bullish, so I left it alone. It was a good try. Then this one started to show some initial signs of topping out, and again, the market looked bullish. I didn't do it, and it continued higher even more. Now, though, this is a big day. I mean, if you quantify this day, it's one of the biggest days it's had. We can quantify it with ADR down here and just make this 1. So it gives us the range for that day. And you can see right here, it's the biggest day we've had since this day back here. And that was also a top. The top for a long time until just recently. So a big move. It's a punctuation mark. It'd be interesting to see how much we pull back, but I would say with the way that this one has rallied, this is one of the 4 biggest cannabis stocks, right? You have ACB, Aurora, you have Kronos, Tilray, and CGC. This one just created new market structure, or perhaps creating new market structure at highs after breaking this market structure up. You form a high, theoretically you push all the way back to 14, 15, and still now you have your new market structure. That's your midpoint of last month's range, and then we really stretch it. So this is huge. This is a big move up. That's your low, that's your high. Do we get some sort of midpoint retest? This, I think, again, if you've enjoyed some of this move in cannabis, I'd take some profits here along the way, or perhaps protect positions at best or at worst. This thing could really see a snapback. I'm unfortunately not in this one, but again, there's always time. CGC is another one. I am in this one. I had a huge, this was my largest position and had a huge move up. Took a bunch off here right before options expiration, and continue to hold the other portion of this position as well in terms of shares. Again, I've been in since 32s, so this one's gone up 20 handles here to 52 basically very quickly. And again, on a failed high like this today, a rejection of the previous month's high as well, after a big impulse rally up, it wouldn't surprise me if this thing were to pull back by some degree. Again, how much do we pull back? Who knows? But even if we do get a pullback, I would say that this is likely going to be defended, and we see either a higher low and go, or we see a range bound action. You can see here we have wide. That's your pivot range for this month, very wide. I think odds favor chopping around value. So I think this thing drops, maybe to 45s, 46s, rallies, drops, rallies, drops, and then eventually tries to go higher. That's best case scenario, but I think near term, again, I would be very cautious selling these. But if you employ the right approach, then you should be fine. This right here could be a great pullback by some degree, right? Is it 42? Is it 45? How far do we pull back? Do we fill the gap? That could be a great near-term trade, 1 to 5 days out. If that were be the case, you don't really want price pushing beyond 50-50. It's got to hold that 50-50 zone. Okay, so another one here in the cannabis group is OGRMF. This is organogram. I am in this one also. This one's been a double from the $3 level up to $6.20 just in the recent few weeks. This one hit R3 today. So if I were to bring up my visual trader here and bring up OGRMF, it hit R3 here on my PivotBoss bands right there at 6.2. We saw it today when it was sitting right there this morning. I said, you know what, that's probably a spot to take profits. We'll see what happens. By the end of the day, it definitely did. Outside day down with a sell signal. You can see when it gets above $6, it doesn't stay long. If you double from 3 to 6, you're going to see a lot of profit taking. Now the question is, how far of a pullback do we get if we do pull back, right? If we do reject, do we come back to value? Value would be about 4.8, 4.9, right? So again, this is one where we've gotten a solid rally up. Tomorrow morning could be an opportunity to enter for a continuation back down, or any pullback could be bought. I think, again, I'm a long-term fan of cannabis stocks, but short-term, you have to know that the swings are going to be there. You're going to get these swings, right? But I think when you look down the road 2-3 years from now, they'll be much, much, much higher. Much higher. So You know, what I'm doing with these is swinging them. I'm taking profits where I can and trying to build positions that I can hold for the long term as well. So this is another one that's topping out. You also have InBev. This is a soda cannabis company, and this one has also been a great range-bound candidate. You can see it goes from 3 to 350 up to about $8. You know, it's done that move 1, 2, 3 times. It's going pretty good inside this range, right? Not quite R3, but close. You got a failed high above the previous month's high here, a rejection signal coming into play. Again, it wouldn't surprise me if this thing were to pull back to value here pretty soon. This one is also optionable, so there are options on this one. For example, buying the March expiration 8 puts would be a good way to go here, and if this thing were to pull back to value, probably take that off. I would say, I don't know if this comes back to $3 to $4, but if it did, it's another buy opportunity back up. So yeah, this one's looking good. After this recent pop here, it could be short-term overextended. Again, this is one that's been very strong. I like this one long-term, but in the near term, it's a 4 to 8 game right now. Another one that we have on the sell list is TLRY. TLRY, and one thing about TLRY is that it's been obviously you had the big parabolic move and it's crashing back down, right? It was a big bubble, a big short squeeze, the whole thing. This one reminds me a lot of that Bitcoin chart, the futures. When the futures came online after the big pop up, it dropped, it bounced, and then lower high, lower high, lower high, lower high. Well, right now we're seeing another potential lower high. You can see right here a pretty solid rejection today. Got as high as about $90 and then closed at 83.36. That's a pretty sharp rejection. That rejection, while this is a still developing PivotBoss pivots, because you know this is a new stock, newish. You know, it's still developing, but it is sitting at R3 on that, on the developing new pivots there, or bands. Every time it hits a new high, drops pretty sharply, right? And then boom, all of these lower highs have been sold. Every single one has been a lower high. It has not shown the ability to push beyond the prior pivot high. Ever since this day, it's been lower high, lower high, lower high, lower high, right? And so again, I think with this one, there's a great shot to see another drop down. How far does it drop this next time? I don't know. You know, I usually quantify it, but with this one, again, it's a little different. TLRY, because it is kind of a weird stock here in terms of its auction. If you look at the bearish, I clicked the wrong one. Oh, I see. So if I look at the bearish, these are pivots again. Why isn't it? Oh, you know what? There's not enough here. So let me go over here real quick. Let me go into targets. Let's make them bear. And instead of 10 months, because there's not 10 months, let's make it 5 months. So there's not 10 months of price action, but there's at least 5 months. And so using average 5 months range, you can see from the high that we just put in today, 89.88, your primary target for the downside would be 54 to 42. Again, this market is a little weird because it had high range and all that. So maybe dropping that down again, say to 3 months, maybe the last 3 months instead of the last 5, because 5 includes the major push higher. So maybe it's a 3-month average we use, and now from that high, we're looking at something that's a little more manageable, somewhere between 59 and 66. There's a nice LV in there, previous month's lows, right there. Any pullback tomorrow could be a selling opportunity for a continuation to 65 to 67, you know, something like that. So I think this one has a good shot to see some aggressive selling pressure. It could be right out of the gate. Again, we'll see how that develops, but that's one to watch. And then we also have I wanted to bring up Stryker. This one's been very bullish. We've had a major gap up, but we are at significant resistance. If you take a look at the weekly chart, you'll see right here that we're up here at highs. This is as high as it's been. It's been a very massive rally. 180 is just a significant level, right? And we're testing it now. Major gap up on earnings and a 4-day range sideways. We're sitting right here at the 180 level. You can see 178 to 180, just significant resistance each and every time. While we could easily push higher, I would say perhaps an out of the money March put rather could be a way to go. For example, the 175 March put, and if this thing drops down and starts to head lower, that March put could become deep in the money. Because if you look here again, based off average range, right, and recent highs, that thing puts you right back into this zone. If we do a 10-month average, I think it'll be a little better there. I had to change that because of TLRY. So if we look at 10 right here, it puts you between 162.5 and 166. Gap fill here, recent support here. Here's 180. It drops from 180, it goes to 162. Drops from 178, it goes to 163. Drops from 178, goes to 160, right? Each and every time. Again, this is a good high quality target. A 175 out of the money put could be a way to go. March expiration and give it time to push there. So again, that's another sell candidate that could be very, very nice. And the last one I will leave you with as a sell candidate is CREE, CREE. Just had earnings, pops higher on earnings. This one also at long-term resistance. You can see here, hit resistance, fails, and drops. Over here, hits resistance, fails, hasn't quite dropped yet. Instead, it has 2 absorption days here. Ideally, price continues to trade below 51s or 51.5s. Somewhere in that zone could be a great selling opportunity for a continuation back by some degree. If we get all the way to 41s, that could be huge. But again, I think this has a good shot to get just a 45 would be a good trade from where we currently are, with a shot to see as low as 42s or even lower. So those are a ton of candidates that we looked at today. A lot of longs, even a lot of shorts just in case here. The market seems a bit overextended to the upside, but no major signs of weakness just yet. So I don't want to jump in front and start putting in too many shorts when the market's going up right now. So again, watching to see how this plays out as we head into February. I think we got a lot of great stocks to look at from both a short-term and long-term perspective. I want to say thank you all very much for hanging out with me here today. I will be putting the recording up here very shortly, and hopefully by the evening it'll be ready to go. Everyone have a fantastic rest of your day, and I will see you all in the trading room. Take care, folks. See you soon.